Ohio has a rich and diverse profile of job growth in the state, ranging from farming to government. Historically, one of the most important sources of job growth has been manufacturing. In recent years, it seems both the state of Ohio and the nation are undergoing a manufacturing renaissance. To give us some perspective on this important discussion, we're joined by Jim Russell, U.S. Bank Wealth Management's Senior Equity Strategist. He is with us, as he is on most Sundays, for this week's U.S. Bank Economic 360. Thank you, Jim. Appreciate you being with us.
Good morning.
How important is the manufacturing sector to economic growth here in Ohio?
Brian, it's enormously important, especially to the state of Ohio. A manufacturing job is really a gift that keeps on giving. The academic work points to that, you know, if Ohio can land a manufacturing job, there's approximately 2 to 3 service sector jobs that also are created. So it has a little bit of a multiplier effect. We'll also tell you that the state of Ohio, manufacturing is the largest segment of private sector wage growth, and so very important stuff there. Ohio is also 6th in the country, employing about 12.8% of the population in manufacturing. You can see on the chart here that 17% plus of GDP is attributable to manufacturing, well above the national averages, and importantly, you can see that since 2009, that line is nicely higher.
What do you think is behind this resurgence in the state as well as in the tri-state region?
Really, there's a number of things at play, Brian. All of these really benefit the United States, but Ohio and the tri-state region, as you mentioned. First of all, the United States has had very stagnant wage growth, and that's, of course, been publicized as a negative, but in manufacturing, that's actually a positive. China and Europe have seen extremely high levels of wage growth, really attracting many manufacturers to go ahead and locate in the United States and in Ohio. You can see also the percentage job changes between 2010 to 2013, which is a fairly stagnant time for the United States in terms of job growth. But in Ohio, we saw changes of 8% plus. Indiana, Kentucky also registering very nice changes in job growth, well ahead of the United States. So we do think that the manufacturing renaissance is alive and well here in the tri-state.
We heard for years about the exodus of jobs from this country to other countries that had lower wages. Have these changes meant that there are more companies, worldwide companies, that are moving jobs into the U.S. now?
They are, and again, the wage growth and the lack thereof in the United States is accountable for one of those changes. Also, the very low price of natural gas. Natural gas is actually the lowest it's been in some time, and it's the largest energy input cost for manufacturing facilities. So that also keeps costs on the low side of the equation. Again, wages have doubled in China in terms of the manufacturing labor, not so here in the United States. You can see a number of examples here where China has moved jobs to the United States. You can see Mexico, Canada, and a few other manufacturing jobs also staying in the United States. I think this is a story that we'll be revisiting from time to time as the momentum here is pretty strong, and especially in Ohio as well.
We look forward to that. Thank you, Jim. We appreciate you and U.S. Bank.
Great to be with you.